Share scope. Yeah, it'd be nice. Nice just to. Oh, let's not worry about that now. Actually,
be prick free for a couple of weeks.
Right, how are we doing, guys? We are live on YouTube.
I'm good. Oh, are we? I better watch what I say.
Yeah, yes, we are. Yeah, we're live on YouTube. Okay, so let's share screen now. We are looking at a potential short in the FTSE. I'm just going to wait to the top of the hour, see if I can get a little bit more information on this. It did come all the way back in the end yesterday, but that's just. Good morning, Lewis. Hey, Helen, as well. How you doing? Share the joke. You don't want to know, Helen. You don't want to know.
We'll tell you in Bali.
We'll tell you in Bali. Yeah, I'll tell you in Bali. You'll pick it up there for sure.
What happens in Bali stays in Bali.
Right, so we're looking at a potential short in the FTSE. I'm just seeing if I can get a bit more clarity on whether this is a good entry or not, actually. Let me just check the market as it opens up. We had a healthy reversal in the end yesterday, and it just messed up my trade, which was quite annoying, to be honest, mate. Yeah, I mean, it's one of those. It happens, and I kind of made the choice yesterday, in some respects, not to be in front of the charts for the whole day, which I should have been. Really, I managed to. I got a little bit of management done, but nowhere near as much as would have been useful. So it's just kind of scupping me a little bit. Now I am really tempted to get in here. I wonder if I should just ease in. Let me just double check. It is a short. I'm taking a short in the FTSE. Yeah, I think I should ease in, really. I'm going to ease my way in. It won't matter. Let me say, let's take a short. So I've taken a short there, and I'm going to ease my way in, just in case it wants to come up a little bit. Let's pop that on. Okay, quite like the way that started up. No, I can't give you the parameters just yet because I'm trying to trade it myself. Actually, I might ease my way in and just as quickly ease my way out. So I'll put this stop up here for now. Now that's too wide. 40 pips stop. Yeah. Let me just see here. You know what? I'm going to close this. I mean, it was an easing in, but straight away an easing out as well. I don't particularly like the way that's shaping up. Pretty nice setup straight away, but actually the market still looks pretty hot. I don't. Oh yeah, actually it looks really hot. GDP numbers from the UK were pretty awful. Still think that the market has got a chance to come down from this particular level, but we know how potentially irrational it could be. So I'm not going to get too married to that particular scenario. And I think easing in and easing out would be the way to potentially play it, rather than committing too much capital. Either way, it's the last day of the month. It's the last day of the quarter. Am I right on that, Jeff? Yeah, last day of the quarter.
Day of the year, mate.
And the last day of the year, financial year, is that?
Yeah.
Yeah, last day of the financial year for well, not for us actually, for the UK, but I suppose for other countries. For you, that's true for you, is it, Jeff?
It sure is.
Yeah. So I suppose given all that, but given that into account, then we should be very, very careful. So I'm just going to wait and see if it shapes up my way. I am looking for the short, but actually, yeah, the market doesn't look that keen to go short as yet. So let's put the pound trade on instead, mate. It might well develop. Just seeing the way that this is kind of flipping around, it may well develop into a short. But at this stage, I'm not convinced, which means that the setup probably isn't there. But it does mean that the setup could be there later on, because the long is just starting to lose a bit of validity. So let's let everybody flush themselves out, not get caught into this, and we'll come back to it in a little while, rather than getting caught up too much here.
Righto, let's deal with the pound then, shall we?
Yes, we should. Helen, got a Q&A for you guys. Have an ongoing discussion. Why does price action diverge from indicators like the WPR and RSI divergence? Oh, okay. Okay. That's a great one. I really like that question. Okay, well, we will get to that later on.
Okay, new toy today. The EA from the developer who doesn't want to be doesn't want to be named every day, and I promise I won't name him today. I'll just give his initials, Kumar. Thank you, mate. Really appreciate it. And here's the new toy. The new toy is we go to here and we go OCO label. We put in the number 1 and bingo. Jeff doesn't have to do any typing. How good's that?
That is amazing.
Yeah. Now I can just place the order. Funny thing is, I'm now trailing on an hourly chart, as you guys know, if you're in yesterday, and we're still in yesterday's trade. From here, we sold here, and we're now trailing down here. So if this is another seller bar, we will trail to there, and it'll start to look like a decent old trade, this one. Interesting. That, of course, will be one of the options that we look at when we do our sums starting next week in the US session, where we're going to analyze all the data that we've got to hand for the past 3 months on the trading 3 bars. So there we go. Here's another cool thing. When I take this off, look at that. It stays there. Clever man. Very clever man. So these are entry levels, guys. Selling at, I better place the trade, eh? I did that yesterday on the bloody 4-hour one, and it's still going as well on this account. Silly me. All right, so we've got a buy stop at 123.22. 1.2322. We've got a stop loss of 122.58. And on the other side of the equation, we have got a sell stop at 122.58. Not a buy limit, a sell stop. And the stop loss is 123.22. I won't continue to go through these parameters, guys. I'm sure anybody who's been in the room before will know how to trade this. If you haven't been in the room before, then please let us know and I can go through it for you so you know exactly what we're doing. It is in still beta test mode. And this one, guys, we are trailing hourly bars, not 15-minute bars. So we've still got yesterday's trade in the market, haven't been triggered into today. And do we still keep the unentered dollar yen and dollar CAD trades? Since the US dollar had shot up in the opposite direction, you mean up towards 98 on the US dollar index, I know. For now, yes, but I'll go through that before we close the session without question. And g'day to everybody who has said hello. Swee, I read your email. Marvelous stuff. Thank you so much for for responding to what's been happening with you in the various sessions of ATW and the various people you've been dealing with. I think it's a very, very lovely effort from you. Thank you so much. Okay, pound. If I'm thinking of trading the pound today, well, we're already in the pound short, right, on the 4-hour chart. And you guys yesterday should be in that. Nothing to do. This is potentially on its way. Interesting, it being the last day of the month, quarter, financial year in, I'm pretty sure, most parts. I'm not sure why the UK aren't. You're an upside down mob, mate. Must be. Anyway,
yours is April to April. End of March to yeah, that's when our financial year is.
Yeah, interesting.
Yeah. Oh, that's when our tax thing goes in. Sorry, mate. Just on this FTSE, I am really keen to trade this short.
Yeah, we'll go back, mate. We've got tons of time for me.
Cool. I'm just going to double check it again. See what we got. Ooh, it's a bit tricky, but yeah, let's come back here. I'm really keen to trade this short. I've got to kind of be a little bit careful because of these pivots down here, but I think I'll put an order in here at 62.28 with a stop up at 62.78. So 62.28. Let's put these in and then put these on. Just double checking that's okay. Yeah, it looks pretty good. All right. So I'm going to put a sell limit in here at 62.28. May not pop up there straight away, but let's see what we get. Stop loss at 78. And let's place that on there. So it's just on that bar there. I'll give you those parameters again as soon as I've done it on my other accounts. If I can get in on my other accounts, that is. $28.78. Yeah, that's a pretty good that's a pretty good level. Might come down to this this pivot here and just bounce up and possibly it kind of comes in later. Maybe it gives us an entry after. But I do quite like this. Now, if it ends up being kind of choppy, then we'll take it off. But I think there's probably enough out there just to kind of give us so an entry short at 62. Sorry, 28 with a stop loss at 62.78. And it is FTSE. And that's for a short. Now, if it doesn't bounce, it doesn't bounce. We'll wait for another opportunity. There's a few levels it's got to get through. So, if it doesn't bounce, if it ends up kind of doing that and closing down there, then I'll look for a bounce at that point and see if I can get in here. Now, if that doesn't happen, then maybe we come down here and see if we can get a bounce back up to this level. And see if we can go short from there. So, I mean, there's a few possibilities here. I mean, if today is negative, this market is heavy. It could go a long way. So to try and get in today, I think would be really useful. If the market is going to be selling off, I don't think it will matter too much where we get in, as long as it's kind of in this upper region. And I think I've labored the point quite a few times about the longer term timeframes, but. Let's see what we get. Even if we don't get the even if the market is to go up, this is well worth a bit of a punt here to try and get us in. I wouldn't go in too heavy, but because there could be plenty of room to the downside. But these areas do look pretty good. So the market has opened up pretty negatively now, and just enough volatility to keep us out. Now, what's going on with the S&P? Yeah, S&P is also looking pretty weak here. So looking at the barometers, S&P is looking weak off that that weekly pivot. Looking across the board at some of these other markets as well. This is the Hang Seng currently. Euro Stoxx 50. Showing similar bars, but all of them have got potential levels of support. So we should get a bounce. We should be getting a bounce here. An hourly bar looking like this is going to be a lot more palatable. So hopefully we can get in and take advantage of a negative bar. We've still got quite a bit of time of the hour left, but just look across the board. All of them are looking heavy. So if we can get on board here, that would be fantastic. But there's no guarantee. Orders in the market. We'll see what comes up. And that is going to be me for a bit, mates. But yeah, I just wanted to make sure that we're all on the same page here.
All good, mates. I'll take it back and share a few things that you guys won't have yet, I think. Tons of trades in the market. Can't believe it, actually. For the end of the year. Actually, I want to have a look at the end of the year and what it actually means. That's interesting. In terms of, do we expect to see any movement today? Do we expect to see volatile movement today? Do we expect to see anything today? We'll see. Euro dollar. I sold this and placed this morning on the daily chart at 112.12. It's only just gone past there, 112.12. Stop losses at 112.90, and TP1 is at 1.1174, which is just about before those lows. You can't see it on the chart. Pretty much bang on those lows, actually. Just above DS2. There-ish. So that's TP1. TP2, I've got right down here near the monthly pivot, and that's where we'll get our money if this actually does go short. It is my short-term belief. Whether it is my medium to long-term belief, we will see. We've got 32 pips to go before the dollar index. I'm going to share that with you. And this is really the key to a lot of what I'm doing at the moment is the dollar index. And this confluence area that I spotted a few weeks ago at around about 98.18, I think is the exact level, but it's kind of a cloud of a price where everything comes together here. Horizontal level, resistance, potential retrace back to the broken trade line, same here. And I think that's a marvelous place for this to get short US dollar. But until then, I think it's also a good opportunity to trade everything against it to the short side. Of course, bear in mind that when we do get there, take your foot off the pedal, in my humble opinion. Got a stop out on euro dollar this morning. What were you trading, Helen? Trading long, I assume. I don't know. And I suppose, yes, there'd be a trend there, wouldn't there? I don't know. Don't know how those super trends work, to be fair. You're welcome, Alan. Let's hope it keeps going, mate. So there we have what I'm looking at. And until we get there, as I say, I'm bearish everything against the dollar. And when we get there, I'll change dynamics very, very quickly. So nothing's changed on that front. We'll see how that all pans out, of course. So let's go back to the charts, or the currency charts that we are trading, and the euro dollar is one. If I'm not in this now, what am I thinking? I'm thinking, got to wait. And we are at a support level or near that support level where our TP1 is. So, pardon me, I'd be expecting a bounce once we do get to that level, if not here at DS1, which of course has got a little bit of form as well. So though the market does appear it has an appetite for the dollar this morning, it could, of course, reverse any time, and the support levels are exactly what that is intention for. They do provide support. People will see those levels and they'll go, oh, okay, better take some profit here on that little intraday trade that I just took that's now, what, 40 odd pips from where I was, or 30 odd pips from where I was. So yeah, don't be surprised if we do see some retracement here. We're likely to go into negative before we get positive, and that's okay. It's a daily chart we're trading after all, and our stop's way up here. So that's kind of what's on the cards here. I wouldn't like to trade it long. We have had a test and a retest of the daily pivot, ditto the weekly pivot. So I think we're probably got the right direction here for the day. Anything can happen, of course. Aussie US dollar is going to be very, very similar, but doesn't look to have moved too much today. I'll just go to the shorter time frames. As you can see from that chart, it's absolutely in the middle of nowhere. And I'll go a little bit wider in terms of the bigger picture. But intraday wise, on the 30-minute chart, again, we're approaching a support level if we're not at it already. So again, looking for a little retracement here maybe, and then perhaps back into a short. I don't see that at this present time. I'd have to be looking, and I'll go a bit tighter now so you can see. I'd probably have to be looking, no, I can't do that because I lose my high. I've got to be up here somewhere, I suppose. Maybe there, maybe there. Then I only get 2 touches. This has got to be my trade line through here, I would think, if not that one. Let's try that. It's a little bit off the money, but that one will be a little bit off the money as well. So that's probably going to be my trade line. And that tells me I've got a whole lot of time to wait before I've got a trade. I've still only got 2 touches, haven't I? I could go to there. But then I've got 2 breaks, can't use it. So I've still got 2 touches. That's valid. We could wait till we get up here, back underneath, retest, that sort of thing. But that's a long way from now. So really no point. Okay, the question was, do we keep the US dollar CAD and the US dollar yen orders in place? Now, here are the orders if you missed them. Got 2 orders on US dollar CAD because it is an OCO trade. And those are the parameters. Hang on, I'll put them somewhere that you can actually see them. Maybe if I go in there and do that, nothing happens. Okay. I'll put that up there and that there, if you're interested. Now, this is actually a breakout trade, so I've got no intention of cancelling this. I think if it does break one way or the other, we'll get a little bit of a run out of it because it is a breakout candle that we're actually trading. Now, what that means to me is it's going to be confirmed as a breakout, in which case it'll go to a resistance level. In this case, I'm expecting monthly pivot if it goes long, or just about monthly pivot. If it goes short, I expect the bottom of the range via the weekly pivot, which has our entry underneath it. Only barely, but it does have our entry underneath it. So if it's a false break, it'll be false here, in my humble opinion. If it's a true break, it'll be true here. So that's the basis of the trade. So there's no need to change this at all until one of the entries is triggered. So that's perfectly okay. Leave that one there. In terms of the dollar yen, now we've got 2 orders on this as well, but this is not an OCO. We've actually got 2 sell orders on this one. The first of the sell orders is trading this bar here. And you can see if we were triggered, the stop loss would have been well and truly taken out by now. Question I ask myself is, will I get another opportunity to trade this short? The answer is, how the hell would I know? I've got no idea. And for that reason, I'm inclined to leave it in the market. The thing that concerns me slightly, if anything, is that we do have a close of the books in a lot of instances today for institutional traders, for banks, for all sorts of people, people who are buying things to...
Yeah, mate, just to let everybody know, for transparency, I've taken an earlier entry than that level because I'm a bit concerned it won't get back up there, and it is a longer term trade, so I've just taken a slightly earlier entry.
Do you want to name it, mate, or?
Yeah, you finished your... in fact, we can come back.
Just take the screen.
Okay, cool. Yeah, I'm a bit concerned that there won't be an opportunity now, and I've gone in light, really light. You know, I'm not going in too heavy, and I think time of year and everything else, and time of month, sorry, time of quarter. Yeah, I've gone in on this level here. Now it might pop back up again, so there might be an opportunity, but I've decided to put back that same small position that I had on up here. I've decided to get it back in the market. It just looks heavy, and really this is a longer term view that I've got of the market. This particular bar is the thing that I'm really trading. You know, we are already at the end of the month, and I'm just trying to pick it up at the high end of the body, because if it does end up closing, if we do get a really negative enough close, 100 pips would be good, but anything below 100 pips today is just going to be fantastic, because it would just show us that that there is further weakness potentially coming into the next quarter. So I've decided to get into this just a shade earlier than that first price point, but actually looks like it might come back up. So, you know, that's just for transparency's sake. I don't want to, I'm not suggesting everybody else does the same by any stretch. And I should put these stops up here, shouldn't I? So let's get these stops out of the way. And actually it's just going beyond my price point there. So I'm probably going to be scaling in effectively rather than putting the whole position on in one hit. But I really like the downside, and I don't really want to miss out on it. So the entry now is at 62.18 for half, if you like, but you must control your account the way you see fit. But I have gone in at short on the FTSE, and this is at 62.18. Stops are still in the same place. I'm 10 pips below. But it is a longer term view. And obviously we have to be very, very careful. Who's down there now? The management points. Now, really, when it comes down to management, we can have a look and see what happens. There's obviously going to be a few issues with this one, but I wouldn't want to take this trade off. Now, if I don't get my second position on, the last thing I want to do is take this first position off anyway. So we're going to have to scale in further down, or we'll have to scale it, or I will be, I should say, I'll be scaling in further down, or I'll be scaling in further up. So either way, I'm going to hold on to this position and not be stopping it out. Now, let's see where those levels might be. Probably there, I would have thought. So we get down to 61.40, then I'm going to move the stop to break even at 61.40. Chances are, if it comes back up, then the trade is off. And you can see that there's a wide picture here. So we're still in the upper realms, if you like, of this triangle pattern, and this is really formed on a daily chart. But let's just flip back to the 4-hourly just for a bit more clarity. Now it might be probably, yeah, it looks like that's where the touches are. So we're still in the upper realms of the pattern just about. So we're looking to get down there, 75 pips to the upside. It looks like around about an even money break, but sorry, about a 1.5 to 1 break. But let's see if it can come down just a little bit more and get down here. So this will be a longer term view that I'll be taking here, rather than trading something very, very short term. which is why I don't mind giving up 10 pips. Don't love it, but I don't mind too much. So I'll scale in if it comes down and breaks this level. I'll scaling if it pops up and gets up to this point here. Okay. The first trade kind of had to get out because it was getting a bit too vicious. It didn't come down. I would have liked it to come down viciously rather than up. So not a big problem losing a few pips on that one if we can get this one. So my hook is out, mate. So let's see if we can catch a big one.
Right, bud. What sort of bait are you using?
Purely brain food. Yeah, sometimes they love it.
You haven't got to stop on, or you have for the people in the room got to stop. Yes.
Yeah, the stop's up here,
after.
and that probably should be the stop anyway. You know, I love an imaginative stop, but I've put it there just for you guys. So it's 62.78 right now, but you can lower it down if you want to trade the high of this bar. Not a major issue, but my mind's just out of the way because the thing is, you know, when it comes down to it, with stops, as I always say, you know, we have to really consider what's happening to the market from one period to the next. You know, we can see that maybe this isn't a downtrend. Maybe what we have is something which is going to create something to the upside. So if it starts to turn here, do we really want to be remaining in a market and leaving stops up here? Not a chance. So this is our protective stop. This is our parachute, if you like. But if the market doesn't continue to fall and it looks like we're turning around, let's say all of a sudden they come out and say that there is further stimulus or there's less of a problem with the US locking down or whatever else. You know, lots of things might happen. So if they do, you know, if there's a catalogue of things, we don't want to be in a trade short if the market's sentiment changes. So this stop is protective, but it doesn't necessarily mean that, you know, stops and targets are loose, you know, to my mind. You know, they're not hard and fast. The only thing that's hard and fast is your final area for a stop, not the not if you want to kind of get out of a trade if it starts to turn a bit earlier, but you know, generally speaking, this is the hard and fast stop. But there might be a you know, a looser stop in this area somewhere. Yeah, I might catch a zombie with a break. That's probably me, Alexis, to be honest. Certainly the way I am at the minute.
Go, Alexi.
I painted my house. I tried to paint my house anyway the other day, and it just ended up.
Work out, mate.
Oh, mate, do you know what? I mean, you know, my daughter's really into Paw Patrol, and if you're not really aware of Paw Patrol is a cartoon where there's always something that goes wrong in Adventure Bay where they live, and then these 6 pups kind of get dressed up in their outfits and they get in their gadget-filled vehicles and they go and fix the problem. I was going to say solve the mystery, but it's not a mystery thing. They go and fix the problem. So I'm there painting, and before I know it, there's half of her Lego set in the paint, and the Paw Patrol have to come and rescue the Legos out of the paint.
Perfect.
So I've got Lego that I'm rolling onto. I didn't realise it was there, and I'm rolling it onto the walls. What is going on? So it didn't go well, needless to say, and I didn't get very far. I think I've put on. It looks worse than when I started, and I don't know when I'm going to get it done now.
Maybe there's a trend to be set there with using Lego imprints.
Yeah, it wasn't great. And then I brought a bucket of water out and I said, right, any splashes of paint that go on the floor, your job is to mop them up, okay? So got that. So she's there with a sponge in the bucket of water, smearing the paint all over the floor and then splashing in it. So that didn't really help me either. So it doesn't seem to make too much difference, you know, what instruction I give. Because I figure if I get her involved, then she won't get bored. But it just ends up that she doesn't get bored because there's a much better game than I've suggested to be had. So it's a mess down there, mate, to be honest. And I'm not the best at DIY.
You got to break an egg to make an omelette, mate. It's pretty simple.
Yeah, that is true. That is true. I think you're talking about her life rather than the paint in the wall, I'm guessing.
All good.
Yeah.
Take it either way.
Yeah, but she was happy. I'm not.
Smile, though your heart is. Oh, hang on.
Yeah, yeah. Do you know what the worst thing was is that when she was, I was like, right, you go and help, you're going to help mummy and get in that corner, and I'll do this corner, and I could hear like her mum sort of like going, no, no, no. And when she was telling her off, I thought it was hilarious, that I could look behind me and just see this carnage going on, but then eventually. Her mum just gave up. She's like, I can't do this anymore. And I was like, oh, no worries, she can come and work with me. And then when the shoe was on the other foot, it wasn't so funny.
Yep, told ya.
But I kind of saw the irony, at the same time.
Sounds like a great day. I remember it well.
Should we get to Helen's question?
Trading, yeah, why not?
Yeah, let's get back to trading. So
hey, before you do, Sanjay, I love Euro Aussie. I've got it set up not on the daily chart, but I'll get to it. I love Euro Aussie short. Sorry, mate.
Yeah, no problem. So it's really a question about indicators. Ongoing discussion. Have an ongoing discussion. Why does price action diverge from indicators and divergence convergence? So let's bring up an indicator and talk about it, but we can bring it up on a daily chart. Now, you don't need indicators for this very reason, really. You don't. You can see it all on the price chart. So where are you indicators? No, I'm not saying they're not useful and you shouldn't use them by any stretch, but they're not necessary because you can. I could bring up the winnings percent R, but I don't know what what parameters are you using. I don't suppose it matters. I'm a bit more familiar with RSI, so I'm going to bring that in instead because they're all the same, right? So let's have a look then. So we have price that diverges from the indicator. So let's say this position here. This position is coming down, and what we can see is that the indicator is just starting to make a higher high here. So we're looking along here, or let's look. Well, it doesn't really matter. We'll look along there. Let me just tidy this up. And we go along here. Where we have another one now we can see here that price certainly from this first position here is making a low. This is a good area actually. Let's use that. So this price is is making a low between that point and that point, while the indicator is diverging. So what we're seeing when we kind of think about what happened between this point and this point. Let's see if we can get this down there. That point and that point. So these indicators are telling us about momentum. And momentum is expressed in the bars. So if you see red, then that is going to suggest that there's some really negative momentum. That momentum is cruising to the downside. Now, what's happened in this area is that we haven't got red. So really, from where it started, to come down to make the point on the indicator here, even though the area is probably fairly similar in movement as 100. Well, maybe it's not quite as far. Actually, we're looking at this one here. That point to that point, and this point to this point. The fall, even though there are gaps along this way, but the fall isn't quite. The momentum isn't quite as direct. And that's really kind of what it's showing us is the lack of power of the continued move to the downside. So this one actually flips up from this point to this point here because you have a gap up. There are no moves to the upside on the in this move down here. So that is just falling and falling and falling and falling. So when you start to see the move back to the upside, then what happens is it's going to print the momentum, moving back to the upside, and then so you're really getting rather than getting a big move down here from this point. Really, what this is measuring is this point to this point here. This point here to this point here. Is that right? Yeah, that high there. And this one's measuring this point here to this point here. So there's our 100. There's our 100 down there. And what we'll do is we'll bring this up here. And then we start to get the move to the upside. And even though there's another big move down, this is only going to measure from this point to this point. And then we start to flip up again. So these are all the stages really that's kind of the RSI has given us. That one there, this one here. So what it's kind of telling us is that the price is not falling quite as fast. You know, it's really, you know, you could call it a velocity indicator instead, if you like. So price, relatively speaking, isn't falling quite as fast. From this point to this point, it took 1, 2, 3, 4, 5, maybe 6 days. This only took 3, 1, 2, 3. So it hasn't really given us the relative move on this one is double, because that took 6 days and this took 3. So it's really sort of like showing us that to make these lows before it pops up again, and that's what we're really measuring, before it pops up again, it's taking less and less days. This one was hardly any days whatsoever. So then you start to get divergence. You know, it's really sort of like saying that the move to the downside is lacking momentum because there is not continued, you know, the days are starting to become less and less and less and less, you know, as we kind of like move to the downside. So if it flips up, then it's really measuring our day that's flipping back up again. This is RSI, but I'm not that schooled up on Williams percent R, if I'm honest. You know, I don't know it that well, but I would presume it would be the same, and we can bring up Williams percent R and see if it's shown us the same thing. Now, you know, when you look at Williams percent R and the maths to it, then it will explain it to a degree. But so I don't know what your parameters would be on Williams percent R. But let's say we bring in the same thing. It's really showing us the same. It's really showing us the same thing. You know, over 10 periods, it's calculating it. So it's kind of saying, you know, then it's flipping up here, but Williams percent R is still coming down, and it's down here. Now, if you get a faster line, then obviously it's going to show you it's going to calculate it over a shorter period, which means that you're going to get more volatility in the indicator. But all it's really showing you is the number of moves and the size of those moves when that number is calculated in one direction to another. So if you don't, you know, like this area here is becoming, you know, a little bit choppy. You know, we have to calculate the distance of price, and we have to calculate how many moves. There's a lot of green bars, but price hasn't gone very far, so the indicator won't go very far, and then we get this flattening off over a course of days. So because price hasn't really moved very much over the course of this days, it's flattening off. But what we're trying to establish really is does the price points match the amount of days that it got to get there? And in some respects, I suppose it's kind of telling you about exhaustion. You know, if it's getting to price points a lot quicker, it's sort of saying to us that the price is the market is getting a bit more exhausted as it's continuing to come down, because it's just jumping and jumping and jumping over a course of very small, you know, less and less days. Yeah, I mean, they are measuring overbought and oversold, relatively speaking. That is true, but how you use that stuff is the trick, really. You know, looking at overbought and oversold. Let me just get rid of this bottom one because it's making It's making the so in this area, yes, you know that the momentum is telling us that almost, you know, the amount of time that it's kind of like taken to get up there, and in relation to what's happened in the previous kind of 14-day period, then this does become an overbought area. You know, it's not an overbought price point, but it's an overbought area because of the way that the market's reacted. And it's all relative, you know, it's relative, you know, and we have to sort of like figure out what indicator that we should trust. And really with going with that, and not only what indicator we trust, but what setting that we need on the indicator, because we have to go back and say, okay, well, when the indicator does get up here, does it provide us with a genuine signal that the market you know, will be more likely to come down from this point or go up from this point? And we can see, you know, when we're looking at this RSI 14 on the daily chart, that we've had a couple of incidents here where it looks pretty good. That did suggest that the market would probably level off at that particular point. And then we're seeing that that as price goes up, it takes a lot longer. That, you know, the days to get back up to this point are taking a lot longer to get back up to the same price point. So showing us that there is weakness in the momentum. You know, the momentum has started to kind of loosen off there. So the volatility in the market is a lot more gentle, if you like. Now, if we kind of keep going back, we see oversold conditions here. Yeah, it's pretty good. You know, it's a pretty good indication there. Pretty good indication there. Pretty good indication here that that the market would come down. Pretty good indication here that the market would come down. But we've only looked at you know, a course of about a year so far. So you'd really want to make sure that you go back and check out how good this indicator is at these particular parameters for telling you that there is a high probability that we are at a turning point. And if you ascertain that it does have validity, then you can utilize it, you know, as an indicator. And in this way, because there are many different ways to use indicators. So you know, if you're going to be looking at oversold and overbought, then you could use it to start with an overbought or oversold scenario, and then look for divergence. You know, divergence between this point and this point. There was almost a lack of there's a lack of momentum with the indicator as there is with this point. 1, 2, 3, 4 days really, to 4 price points to get right up to this high. This one only took 2 to get a little bit further beyond. And, you know, I guess there's certainly some argument to say that the market does just get a bit exhausted, and there's an argument to say that the market needs structure. You know, that the market needs a structural point to come back to. It needs foundation. And you know, I've never really thought about it this way, but maybe the momentum indicators are just indicating that we've got no structure. You know, when you see a market kind of diverge like this, it's lacking a structural point, which is here. You know, this is our structural point. So if that's where the market has come from, and this point here, then there is a suggestion that we have to come back and test that minimum. I have to test that structure. Now, if you start to see divergence when you've got that lack of structure, then that probably adds to that could add to the probability that we're going to come back and at least test this, because at that point we're going to start getting a different look, and we'll be in a different phase at that point. You know, so we can look at that divergence to give us an indication. And here's another example. You know, we're making a low here, and we are making a higher low here on the momentum. And again, this is lacking structure, because it's just fallen, a deep drop. But the structural point that it should really be testing is this point here, or maybe we could go a little bit lower. But what did it come to? Pretty close. I mean, but it's somewhere in this area. I don't know if it tests it eventually. Yeah, it sort of does manage to kind of test that at some point. But I would look at the divergence and see if it's if there is a structural point that it's kind of come from that that would suggest that it should come back. There's divergence here as well, and divergence here, and then the structural point, which is kind of, you know, this area here that hasn't really been tested. So if there is divergence and then you look down and you see, well, actually there's a structural point that we haven't tested, then that that might suggest that that we should be coming into this area. You know, we can start to kind of figure whether we should come into this area. So, you know, you have to be careful how you use some of these price points. Now the FTSE really, do we have it here? I mean, there's loads of structural points here, because there's got to be a point eventually where this has to come back up here. Probably can't look at it on this particular chart. Somewhere around here, but we haven't look at as yet. We haven't had divergence. Now, there's always the question of there's always a question of the sentiment cycle and everything else. Now, this market has flown to the upside, and it hasn't really kind of given us anything in the way of a really good signal of any kind of divergence. And that may be what we need, you know, that for this market to kind of behave properly, we probably do need just a little bit more in the way of a momentum indicator. So falling again on some of these weekly timeframes, maybe starting to come down again, and not over the course of a shorter period, and then giving us that divergence on the weekly chart, that would suggest a much better point to then be starting to look for a genuine long on the market. You know, if it can come down and give us that, you know, V-shaped recoveries are absolutely hideous because they don't, as I say, really about structure. They kind of lack structure. They lack a foundation and a base. But obviously with the way that it kind of came down from that point to this point, then it can increase the probability, I suppose, because we haven't tested that either. But this market would be a lot better as a buy signal if it did just give us some divergence and showed us that the momentum to the downside was just weakening somewhat. But so far we've had no momentum down. You know, we've had that and no momentum to come back down again. So so look for the amount of bars that it's going to be coming and falling to the downside, and look for the price points to kind of suggest whether the indicators and price points are kind of out of sync. So overbought price level, not necessarily. No, exactly, Helen. Exactly. Overbought does not necessarily mean, yeah, exactly that. Really, overbought just tells you that the momentum's gone, that the price has really gone a bit too fast to that point. Often there is, which is why people use it. You know, there are trading systems that that trade pure divergence. You know, they don't really look at a whole bunch else than divergence. And yes, oftentimes there is a divergence between the price point and the there is a turn in price at the end of the divergence. Because you know because the suggestion is that the market is getting a bit tired of going in one direction. So you know, if we kind of think about the market in this constant dilemma, if it's tired of going in one direction, then the most sensible thing is that it's likely to go in the other. Now there was one other thing I was going to mention. Oh yeah, there's also divergences between indicators as well, and you kind of have to get a further slightly deeper into it. But with something like MACD, for example, then the order that you put your indicators in can be really important. If we look at this, I don't know if I can edit this a little bit. I really want Oh, that's a shame. You can't. Well, I could change this to green at least, but it'd be better if it was going green to red. But that's only going to give me that. So with a MACD, then what we want is, hey, Alanda, how we doing, buddy? With MACD, what we want is for RSI to react before MACD, depending on your settings, of course. But you know, MACD is something else that that you can utilize when you're looking at potential divergence. So where do we see some divergence? We saw it on the daily, didn't we?
Hey, Big O, did you see my post in the traders Telegram group? You've got a big fan base in here, buddy. If you're willing and able and available, then if you can have a look at that that post, that'd be great.
Yeah. So this is an example. Look at how that RSI starts to make higher highs, where you've got the stock market really continuing to make these lows. But look at MACD. MACD is continuing to make the lows. So MACD is lagging the RSI, which is the right order. That's the way it should be. And so when you start to see the MACD turn, like we did here, then it can become a really good signal that that the market is genuinely starting to come back up again, because the RSI has led us. The RSI has said momentum slowing, momentum slowing, momentum slowing, momentum slowing, and then MACD starts to flick up on this bar here on the 24th. You know, that was almost like our genuine kind of signal that that the market has found its bottom. So it's really just a way that you can start using these indicators in conjunction with each other. And as I say, you want to make sure you get the order right. So you want to make sure that RSI should lead MACD. It should not be the other way around. If I can find another example of that. We had this, didn't we? That one there. That one there. We did get a bit of a signal there. Now in this one, MACD is really giving us something kind of similar there, but we obviously have that that higher high as that comes up. So you know, the way that I'd be looking at this, the way that I'd want to start reading this, is when that starts to fly to the upside. When you see the MACD start to drip down, because the RSI starts to turn. Look, RSI turns. MACD still making a high, still making a high. MACD catches up here. So it's much, much later. But this bar really gave you the genuine signal. Now that doesn't mean that you don't want to get in earlier, especially when you look at that price point there. But what the MACD is saying to you is confirming. You know, that this indicator is confirming what you've seen on the RSI. So if you don't utilize it in isolation, but you utilize it as a combination of things, then you can improve your confidence, not necessarily your probability, but you can improve your confidence that you're either in the right direction, or you might want to wait for that confirming evidence before you start trading in that particular direction as well. So looking at indicators in comparison and in conjunction with each other can be really useful as well. Okay, so where are we at? Let's get rid of these. If you have any other questions on that, though, post them in, Helen. I'm quite happy to kind of go through this. And really, I'm kind of saying this with no preparation, so the explanation might be quite murky. And if it's not clear, rather than me just repeat myself, if it's not clear, do tell me, because what I'll do is I'll prepare something for when I'm back in the UK session again, and we can have a decent kind of chat about indicators. So let me know. Let me know. Even if you think, yeah, that's okay, but could we go into it a bit more? Tell me that, and I'll see if I can get something prepared, and we can talk about indicators in further detail. Gaps. The gap. Oh, this gap here. That gap's been filled.
What a gap. Poor chap, never been known to laugh. If he did, it's penny to a quid that his face would fall in.
A gap in a market is where there are no orders. So what happens is, and then the market abhors a gap. You know, they say all gaps get filled, and I think statistically they all do. I don't know that for sure. But let's say you've got something, you got a man. I like to use the cars because I can draw them nice and easily. You got somebody selling cars, and then over here you've got 5 people. So 5 people are kind of willing to buy this car, and the car goes up for $100. You know, if a gap could be either up or down. Now, so they say to this person, "Will you buy my car?" And one of them does. Sorry, I shouldn't have crossed him out. One of them does. So then we have 4 buyers left. So the car is you know, if you were to sort of like consider that on a chart, and you've got a chart with $100, and the product is cars, and that was on day 1. Then you get a price point there. Now the next offer that the car is going to be on offer is at 101. Nobody buys. At 102, nobody buys. And then eventually somebody says, you know what, I will buy at 110. So that's where you get a gap. And then, you know, the from 111, 112, you know, that then there's other people in the market. But this is where no orders, no buyers were willing to take on any orders that were on offer. And the same can happen with a gap here. Nobody was willing. There was you know, where people were offering to buy, there was no takers here. There was no takers in the buy. So there was all these orders would have been sat between this point and this point. The price points would have been sat there, but nobody's willing to buy until it gets down here. So you get a gap between this point and this point. So people would have, you know, either algos, the algorithmic traders, or market participants have not got an interest in the market from this point and this point. Now that's really that can tell us a lot about the state of play, because what can happen is if you get a gap in the market and the market comes back up again, if it's quite a recent test, then the fear can come straight back in again, because, and you know, this is called a gap and go. You know, that particular gap holds because if people weren't willing to buy before at that price, then that can act as a horizontal level of resistance, as it did here. It acted as resistance, that gap. But eventually the gap must be filled. And at that point, then the previous price point can act as a horizontal level as resistance, which it did here. And we know what happens with resistance. If eventually it breaks, it can turn into support. So we can use gaps, just like everything else, as potential price points to trade from and to. And you're either going to get a gap and go or a gap and fill. Because the high probability that a gap will get filled, then as soon as this sits up in the market, as soon as this particular price point between there and there sits in the market, anybody looking to buy this market at any point, here, 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 will know that their target is going to be there. Because eventually it's going to get filled. There's a gap up here currently. So long-term speculators are going to go, well, at some point it's coming up here, because the market hates a vacuum. But we don't know when, you know, and that's the kind of interesting thing about gaps, and you know, one way that you can't get too caught up in trading strategies that look at filling the gap Yes, yeah, it's a really it can be a really key area, the gap as a horizontal level of support and resistance. It can be a very key area, so you can utilize that, you know. Okay, mate. Well, I think we're pretty much done. The FTSE's on its way here. It's starting to move a bit further to the downside. I don't know whether it's done it on this one, but let's have a look. Just snuck in and resting a little bit on this this daily pivot here. So let's see if we get a bounce to the upside from this point, or it can actually break down. It may be significant that that the market managed to close just above that pivot, and there may well be some upside from this point. If you believe in the upside, this is a buy zone. That there is a decent buying opportunity. But if you believe in the sell side, then this might well provide an opportunity to further add. But that will be me, mate.
Happy days. A couple of things to look at. One trade to place, and we will bid you adieu potentially, unless there are some more questions to ask. Plate I'm going to trace is this one. The trade I'm going to place is this one. It's Euro Yen short on the hourly chart. There's the entry, 120.77. There's your stop loss, 120.95. And your TP1 is a good question. Haven't worked it out yet. There's our entry, which is a little bit dodgy, isn't it? A little bit tight on this former resistance level. Yeah, okay. We might have to sneak that down a bit, guys. The entry will be, where did I get 77 from anyway? That's way up here. That's ridiculous. Let me change all of that. The entry will be 120.57. That must be what I meant. And the stop loss will be the same, 120.95. Now, TP1. TP1 is going to be, are we brave enough to go to the weekly pivot? I don't think so. 120.37. So it'll be 20 pips of a TP1. And I'll just nominate a TP2. I won't place it just yet. You don't really want to trade through the weekly pivot, but if you've taken 20 pips here, then it's an H1 trade, so you'd be knocking half off, right, at that point, moving stops 20 pips from entry. So you'll be free trading at that point. So the weekly pivot's not an issue. What will be an issue is probably this level here. Let's go a little bit further and go this level here. So 120. So 120.03 or something should be your TP2. So you want to get out just before the 120 handle, right? Say there-ish. 120.03 should be your TP2 or your target, really. If you want to leave a bit open, if you think this can travel a bit, then would I advise? Yeah, why not? Could come back into here. Monthly pivot's got another, what, 12 hours to live. I don't think that'll probably worry it too much. There might be a little bit more left in it, but yeah, I'd be getting a fair bit off it, a fair chunk off at that point if I were me, and I am me, so I will. The other one, in fact, there are another two. Euro Aussie, as mentioned, I think by Sanjay. Look, I do like it. I like it a lot, and I like it on the 4-hour chart, which has got 53 minutes of breath left in it. Once that expires, the breath that is, I would like to place an order underneath probably the black bar. So I'll preempt that by giving you the entry level. the entry level will be at 1.6321, 1.6321. And unless this takes off to the upside in the next 53 minutes, then your stop loss probably needs to get above last week's weekly pivot. So probably won't show me what that level is. Definitely want to be above the daily pivot today. So around about 163.85 would be probably where you need to put your stops on that one. That is Euro Aussie short on the 4 hour. And Sanjay, if you've picked that up on the daily and you're going okay, then happy days. I see where you're coming from. It's one of my favorite little bars to trade, but it's not contextual for that particular bar. And I know that sounds a whole lot weird, but it's just not contextual. What I'd like to see is that bar after a top has been hit. So one of these tops get back under here, then come back, then give me that bar. Or if we're up here somewhere, give me that bar up here. If that bar was white, then that's the bar. That's where I want to see it, up there somewhere. Just not that fancy there as far as I'm concerned, but could well turn out to be the one. The one for me is very clear. That's a very clear false break for mine. And if we can get into that, happy days. Taking profit, you probably want to be taking profit, in this vicinity somewhere just before DS2 pokes its head into the picture. And then you'll be looking at anything really, because if this falls, it'll fall. And take out these lows. Yeah, you've got to be taking TP2 before you get to there, I guess. And then bottom of the channel, which is on a monthly chart. So that's what I mean by it can fall a fair way, can get down to here somewhere, but you've got to take your first profits, before you hit these strong support and resistance areas. There is one more, and it hasn't set up yet either. It's Aussie Kiwi. Son of a gun. What I was looking for here was this selling bar, the last selling bar, to come and take out the pivots. Hasn't done that. Still available for us on the hourly charts. If we do come and take those pivots out, then retest the trade line and all the pivots. If we got a double cross on the daily pivot, I'd be okay with that. And we could then look to trade the short. So looking for, I don't want to trade it if this bar here on the hourly or the 30-minute chart is a bullish bar but doesn't take the pivots out. I don't want to trade into the pivots. But if either of those two charts does this, takes the pivots out, then comes back and tests the trade line, or even just close to the trade line, but as long as we double cross the daily pivot, we'd be okay to trade that as well. So there's 3 to watch. Euro yen, where we do have an order in place. What else have we got? There was another one. Euro Aussie. Yes, Euro Aussie. Euro Aussie on the 4-hour chart. You'll note it's also a double cross of the weekly pivot. That's what I wanted to point out. So this has got lots going for it for mine, and it would be my favorite trade. Euro Aussie, that's the best of them if this candle stays as it is in the next 48 minutes. If it were to come down to here, I wouldn't be that impressed. If it were to go above the daily pivot, I'd probably be even more impressed. So I think this is the go for me, Euro Aussie on the 4-hour chart. I'll be looking for it very, very keenly. Right, mate, I think that's it. There's a whole lot to cogitate over the next few hours.
Nice word.
Not least of which is 47,000 trades that I'm already in. Sorry, and the 2,000 that are clogged up behind them. A dollar CAD from last night. I did mention it earlier, Shukri, but let's go there again. Shukri, by the way, we had Shukri in the show last night, guys, in the US session. Wow, what a session that was. Shukri, man, you know, SH1T on, I nearly swore. SH on YouTube, not allowed to do that. You know, your SH1T on the cryptos, mate, was very, very interesting to listen to. And we'll have Shukri on. Wasn't it, mate?
It was very informed. Yeah, very, very informed and very informative. I think it was to the point where I realized how far away I am from understanding the stuff, you know.
Well, I never claimed to be anywhere near that, so
no.
I just don't know anything about it.
You know, in fact, it's such a fascinating market. I was talking to my friend last night about it, actually, Mario, that was in the previous week, and I said, yeah, I got into some Cardano, but I got stopped out at 80, and he said, I can't remember what term he used, but he said stops. We're using stops. You know, we don't use stops in cryptos. He said something like, you got to there's an anagram and not anagram. What is it when you have letters that stand for words?
Yeah.
Something like enter and hold your breath. I can't remember what it was, but similar to what Shukri was saying about pray and all that stuff. You get in and you pray, and that's he pretty much.
Yeah, that's right.
He pretty much. Yeah, that's it. Hodl. That was the one. Exactly. What does it stand for? Hold on for dear life or something.
Yeah.
I think it's hold on for dear life. Yeah. So yeah, he expressed the same thing to me yesterday, and yeah, so I was like, I'm not sure whether this is for me. But we'll have a look at it further.
It's not for me, but Shukri could change my mind. I liked a few things that he said last night.
Yeah, me too.
One where you get dividends. That makes interest for me.
Yes, it does.
And rebates and all sorts of things. Yeah, interesting.
Yeah, I think
never knew it was available.
There's some mileage in it, isn't there, mate?
Well, if what Shukri's saying is absolutely on point, then absolutely it's worth having a look at.
Yeah.
Gee whiz, let's get over today first.
Yes, yeah. Yeah, I will get back in at some point.
All right, happy days. I think we're squared up as far as the chat's concerned. And Big O, yeah, got your message, mate. Awesome. I look forward to seeing that. And everyone else, I think, is A-OK.
Brilliant stuff. All right, guys. Well, thanks again as always.
Helen's having a go at you, Ash, by the way.
Oh, are you having a go at me? Why? What have I got? Allegory, is that what it's called? Was that having a go at me?
No, you're going to update what Shukri said last night on a UK show. Maybe it has to be tomorrow, because we only got to part one, Helen.
We only got to part one, yeah. There's just so much, Helen. I can't even upload my own head. Never mind, trying to express it to other people. So I will try. I'll do my best. When we have a proper session, I'll start making some genuine notes. Unfortunately, I was trying to manage my trade at the same time yesterday, so I couldn't fully absorb everything.
Yeah, sometimes we forget that we're actually trading and we're just talking. It does make it a little bit complex and hard to do at times.
Yes, it does. Yeah, Lewis, I mean, the thing is about the S&P, trading the S&P is that if I'm trading the FTSE, I'm kind of doing the same thing. So if you want to look at the S&P, then I am more than happy to look at that. In fact, we'll look at that in the US show today. We'll look at the S&P. There's no point in looking at the S&P during the during the UK session, because it is not it's active if you trade the futures, obviously, but it's not what's driving the market per se at that time. But yeah, sure, we'll look at the S&P in some detail today. I'm quite happy to do that in the US show. Yeah, no worries, mate, no worries.
One thing I was going to do today in this show was go back and have a look at last year, and I'll just give you guys an idea of what I was doing. I went back on the euro. I went back to the 30th of June 2019, and then I went back to I did it on the daily chart, of course. And I found that there was no trading day last year on the 30th of June, but then I went back to 2018, 2017, 2016, just to have a look at what the candles were like and see what sort of volume and movement we had on those dates. And I had a look at the Aussie, I had a look at the euro, I had a look at dollar yen. I got a lot of spinning tops, so a lot of indecision. That kind of goes along with what I think may happen today. I think we might be up and down in the one spot, maybe testing levels on both sides. We shall see.
Yeah, I agree with that, mate. You know, I'm looking at this market, and it does seem heavy, but by the same token, it is kind of lacking a bit of direction to a degree. I mean, I'm quite happy with this FTSE trade, but it is concerning me that the July the 4th statistic, you know, the rally into the July the 4th. Now, you know, as I said yesterday, I put less weight on seasonality because I think markets are much more likely to react on what's in front of them rather than what's been prior. But it does seem just a little bit tentative to sell off. You know, it's sold off, but it seems still a little bit tentative. So I'm with you on that, mate. I'm wondering whether we get a genuine move during the US session. You know, it feels like we should get a move today. As the close of the month and close of the quarter, but it hasn't really happened yet, is it?
It's the one day of the year that I am prepared to bow to seasonality, because I think it's a crucial day for seasonality in my book. And I've got no idea what that says, but I'll have a look during the break what seasonality says for the day.
Yeah,
I've got a funny feeling it's going to say dollar long.
Maybe so.
Because it's still got to get to 98.18. Shukri, for your question, dollar CAD from last night, I think this is what you're talking about, the OCO I placed last night. Not triggered yet, but no reason to change it. It's a breakout trade, so it will happen at some stage, whether that's next month, next year, next season, who knows. But it will break out, in my humble opinion, from this area, and one of those should give us some money. The other one was Euro Aussie from yourself again. What's the short entry? Okay, the short entry on Euro Aussie will be underneath that bar there. So the low of that bar minus 1 pip is how I normally work it. So if the low of that bar is 1.63226 on my broker, then I would go 1.6322 as a rounded down number. Then I'd knock a pip off that. So I'd go 1.6321 would be the entry. And the stop loss, as I said, will be, well, wherever you feel comfortable with the stop loss, but I'll certainly be putting it above the daily pivot today and above last week's weekly pivot. So probably at the high of that bar there. That would suit me, I think. Hope that helps.
Good stuff, mate. Okay, fantastic. All right, well, we will obviously be back tomorrow. Is it Tuesday? It is Tuesday, isn't it? Yeah, it's Tuesday. So we've got a couple more days.
Today? I think so.
Yeah, yeah, Tuesday.
Sure is.
Okay. All right, no worries. All right, buddy. Well, I'll see you in the US show. For everybody else, we will see you, some of you in the US show, and some of you we will see tomorrow morning at the same trade time, same trade channel. We will see you then at 5 to 8.
That's a date. Don't be late.